Hey, happy Friday, July 22nd. Hopefully, you are enjoying some air conditioning as we're kind of getting to the tail end of this heat wave. Wanted to share with you what is going on with our Twin Cities real estate market in the first half of 2022. Typically, our Twin Cities metro area, we've got some seasonal changes as we go from Q1 all the way through to Q4. What we're seeing this year is we're seeing some changes, definitely in Q1 versus Q2. What we saw in January, February, March was kind of a continuation of the crazy COVID real estate market. Interest rates were very low. Buyers were really at a frenzy trying to lock in a property with a lot of competition and getting in a really good interest rate. Q2 rather, we saw more and more people the market was stabilizing. And I think with the rising interest rate environment coming in April, May, and June, we saw some people pulling out of the market and the market stabilizing as the affordability certainly changed with interest rates. So we started off the year right around 4% for a 30-year fixed interest rate. We quickly went to 5%. We went up and touched 6%, which we didn't think we were going to see this year. And then it actually has started to settle down. So it's kind of falling in line with some of the gas prices and the economic conditions. The Fed raised interest rates, and then actually they settled back down. So that was certainly a good thing as the market kind of finds out where their sweet spot is. So we definitely went from crazy to calm, a little bit more stability. So a few statistics that I want to share with you. Year over year, our Twin Cities metro area, the numbers that we look at right from the Minneapolis Association of Realtors, average sale price is actually up 8.8%. We're hovering right around 380,000. So we're seeing more of those high-end properties, a lot more lower-end properties. We're just not seeing them on the market. So overall, if you look back 3, 4, 5 years, those homeowners are sitting on probably an extra $50 to maybe $75 or even $100,000 in equity that they've gleaned over the last couple of years since COVID began. Actually, we're looking at one of the things we look at as far as market stabilization is the list to sale ratio, and what that looks like is what was a property listed at, and then where did it end up selling at? And we've heard crazy stories about, and we've experienced them too. More sellers that are listing a property, and all of a sudden we get multiple offers, and it's going for $20,000, $30,000, $50,000 over list price. And so now that the realtors have kind of got some legs and some data under us, we're able to price properties more accurately, and the market's stabilizing. We're not seeing those crazy bidding wars again, and so we're actually seeing the list to sale ratio almost flat from where it was last year. It's still showing that we're closing those properties above 100%. So I think it's 102% of the list price, but actually seeing flat. So that's kind of trending more in that stabilization direction. With that, we're also seeing inventory increasing. So we're at like zero inventory over the last 24, 36 months. And now we're starting to see things stabilize as some of those buyers are coming out of the market and more sellers are staying on the market. So our inventory is actually up 10% compared to what it was last year. We are still well within a seller's market, and compared to 2020 and 2021, I think it's going to be very helpful as we're seeing days on market really touch around 3 weeks in the metro area overall, which is certainly healthy. So is it a good time to sell? Absolutely. Is it a good time to buy? Absolutely. You're always going to hear me say that. We have to understand kind of where the market conditions are. So we talk about people that were maybe sitting on the sidelines that didn't want to get into a real competitive market, a crazy market. Now is an opportunity. Interest rates have increased, but we also have some strategies around how we can negotiate a better interest rate or kind of structure it so that you can get even a interest rate in the 4s by paying it down, maybe even having some of the seller pay closing costs to buy that interest rate down. So if the opportunity is right for you or anyone that you know that's looking to maybe make a move, they want to be in that competitive situation as it was before. They want to maybe have a little bit more time to look, and now's a great time to do that. Rather than sitting on the sidelines and wait, We're not expecting prices to be dropping. We're expecting prices to stabilize. People were shooting for the moon, and now we're kind of landing on the stars. So, or I guess it'd be the other way around: shooting for the stars and landing on the moon. So, with that, certainly reach out to us. We're happy to kind of guide you and help you navigate through that transaction. For every seller that's out there, those properties that are selling in multiple offers are the ones where they're priced smart. Not overly aggressive, but they're priced smart. And then also they are in premium condition. So taking a little bit extra time to make sure the house is clean and any of those extra updates certainly make a good investment in getting your home sold quicker and for more top dollar. So certainly reach out to us. We'd love to be help you and your family with your next move. 651-777-3434. Take care. Have a great weekend. Bye.